India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Surbi and Nigel. Guys, good morning.
Hi, morning. Well, what a blockbuster weekend we've had. Plenty of action in global markets and here at home as well with this major Maharashtra verdict.
Well, if you're looking for inspiration with regard to a fight back, you've got it in the last 3 days. If you look at the India versus Australia test match, it swung in our favor after a very, very bleak start. Everyone was talking about the NDA, their poor performance in the Lok Sabha elections. Take a look at the bounce back. So if we're looking for, inspiration, well, you've got plenty of it with regard to a fight back. And I have to mention Virat Kohli. Don't write that man out. When he comes back in style and he lets the bat do the talking. Totally pumped up this morning.
The weekend of bounce backs.
Absolutely. And I think let's hope that the market also sees a bit of a bounce back. Because this morning, the start is going to be good, absolutely good. And the question is, will the start be the top for the day? Or is there going to be enough in the sort of bag for the market to keep going higher? So let's start by laying out the big triggers, the big dominating drivers, really. So Maharashtra election results, first up. I think, it's a big thumbs up. Markets are giving a big thumbs up this morning. And it's a big sentiment booster as well, of course. I mean, naturally. Maharashtra is an important state, 13% of overall India's GDP. It's about 9% of India's population. There is, of course, what this means for the state, but there is also, of course, what it means for the center. For the state, we've not had a stable, steady government. We've had, 3 chief ministers. We've had various political parties jockeying for power. Here in Mumbai, if you are in Mumbai, you know what I'm talking about. But I think, and the hope is that now with this kind of political stability coming in for the next 5 years, I think all of that is going to be a thing of the past, and infrastructure projects for a large, economically important state like Maharashtra will show up in the national numbers as well. Consumption is another thing. At the margin, you can say that a lot of this, of course, is pointing in the direction of more sort of freebies, handouts, and I think that is something for the long term. State after state is doing it. And here in Maharashtra, it was no different with the Ladki Behna scheme, which is income transfer to women. And I think we've seen that in Madhya Pradesh, we've seen that in Haryana earlier, we've seen that in every large state. So, but that's a discussion for another time. But for now, there is political stability, and I think markets are cheering it. I think this is also important because the general elections were a bit of a dampener for the ruling NDA. And this is, of course, you had Haryana win, which was good, but Maharashtra, of course, is much more significant in every which way. So this kind of reverses some of that hit that we saw back in the month of June. Okay, so that's the Maharashtra bit. And I think the GIFT Nifty is indicating that start purely on the back of that. US equities, just a quick bit. That's the GIFT Nifty, by the way, 450 odd points higher this morning. So US equities on Friday did well. We were up 1/3% on the S&P. NASDAQ was up about 0.16. The Treasury yield was flat, down 2 basis points to 4.4. Dollar index. Dollar index, by the way, ended on Friday 0.5% higher. This morning, it's down 0.5%. The reason, the only reason that I could see is the fact that Trump, President-elect Trump, has nominated Scott Bessent as he's, of course, he's a billionaire, he's a money manager, macro investor. He's nominated Mr. Bessent for the post of Treasury Secretary. This is the most important post from a market point of view. And the reason the dollar may be slightly lower is because Mr. Bessent is considered to be, he supports Trump on tariffs and everything else, but he's also seen as a bit of a fiscal hawk. So we'll have to see how this plays out and interpretations, etc. Remember, the inauguration, of course, is not until the 20th of January. Oil prices up 1.5%. We're back above $75. Bitcoin, I'm not sure if it's hit 100,000, but I think we are hovering around that landmark 100,000 level for Bitcoin prices. And just one thing, we are now starting today entering seasonally what is the best period for US equities all the way into the end of the year. So keep that at the back of the mind as well. So this is a traditionally, seasonally good part as far as equities in the US go. So just to tie up all the levels, for the Nifty, I think the targets are 24.31, which we sort of sweep across this morning as far as the start is concerned. And then we get to 24.346, which is the 40-day exponential moving average. I mean, if the GIFT Nifty is right, you probably will start at that level, 24.346. I mean, the problem with these kind of gap ups is that nobody gets any chance to get in and to do anything as far as the indices are concerned. Stocks are another matter. I think we are going to get that kind of a start. Should not break, I mean, on the downside, the Nifty should not break the low of 23,263. For the Nifty Bank, targets are 51,127, which is the 50% retracement of the entire decline that we actually had. Sorry, that is 52,127, not 51,127. We'll correct that. And for the Nifty Bank, we should not break Friday's low, which is 49,787. And if the decline is complete, this should not come into view again. GIFT Nifty coming up on your screen. As I said, it's going to be tough to get in because unlikely anybody gets a word in, because you're going to start with that furious gap up straight into the 40-day exponential moving average. And then, I mean, I think 2% on Friday, another 2% this morning. You know, election, no election, in the near term, you got to look at risk reward, and then it becomes a little more unclear in the very, very near term. So 24,500 roundabout this week, I think that's the level that I'm looking at. Surbhi.
Okay, and what's going to be fueling that gap up is the Asian market trade this morning, because our neighborhood is a nice shade of green pretty much all throughout, whether it's the Chinese markets, the Japanese markets, whichever one you're looking at. Singapore also up and about. It's also an important week in terms of a lot of data points coming through, and we'll get the GDP numbers for India as well by the time we sort of wind down the week. And then there are inflation prints in some of the regional markets. But the start is positive, is a short point. It's very interesting, the divergence across asset classes, and that's what I was noting. And just to take that on board, look at what the oil markets are saying and what the gold markets are saying. They're worried about geopolitics, and they're worried about whatever's happening between Ukraine and Russia, and whether this is turning out to be a sort of a bigger escalation between Russia and the US. Which is why oil all of last week was up about 5.5%. Gold all of last week was up almost 6%. Now, this morning, if you see the prices, let's actually bring the hotboards on. On Brent, at least it's below 75, because, on the Friday surge of 1.5% on Brent took it above $75 a barrel. This morning, there's a bit of a cool off. And likewise for gold as well. After a big week last week, almost 6%, this morning it's a little quieter. However, while these two asset classes flash a little bit of red, equities are already in Santa Claus mode. As Prashant also pointed out, this is the end of the year party, perhaps it's starting on Wall Street, because after a bit of a post-Trump lull, the ride was back on. If you look at the gains, what was interesting was the NASDAQ ended flat because some of the bigger stocks like Nvidia, Alphabet, they had some profit taking after the Nvidia results. The Russell continues to power away. Again, last week, over 4% rally on the Russell. But what was most interesting for me on Friday was that the Dow was leading the charge with a 2% rise. A lot of economy-facing stocks and domestic consumption-facing stocks in the US are doing great. Which were the stocks that rallied on Wall Street on Friday? Stocks like Home Depot, Boeing, Walmart. So it's more about some of these economy sort of sensitive names rather than the old tech names. So there's a bit of a shift that's ongoing in Wall Street, which now brings me to India. Let's talk about the moves that we've seen on our street so far in November. The IT index has been a rank outperformer, and we'll talk more about IT as we go forward. We have an expert lined up on that. Over 7% rally on the IT index, whereas the CapEx/economy/PSU side of the market, that's been an underperformer. So if you look at the PSE index or the infra index or the capital goods index on the BSE, they're down anywhere between 2 to 4%. So the question that I'm asking is that will the Maharashtra win get a bit of a tilt back, the focus back on the infra side of the market and the capex side of the market, even here for us, though IT may continue to rally for other reasons, and the dollar strength is something that we've been speaking about, and perhaps the rising spending power in the US. So infra stocks definitely will be in focus. We have good news coming in from the fund flow position, because after many days, the intensity of that FPI selling number has reduced. The number was less than 1,500 crores. In fact, it was just about 1,300 crores on Friday. And domestic institutions were buyers, and we had that huge move on Friday. Expect some of that to continue today, at least at the start. Some interesting stocks in focus. BSE, and the reason I say BSE is that the fact that they're adding over 40 stocks in F&O is showing that they're getting a little creative, a little aggressive. And some of the names include the likes of a Paytm, D-Mart, Zomato. So will it get people to trade more on this exchange versus the other where some of these contracts are not available? So that's going to be an interesting one to watch for sure. And speaking of Zomato, that's also a stock in focus because not only is it getting added into the sensex, it's replacing JSW Steel, but this QIP that they've been planning, they got the shareholders' approval for it. So the company is going to be looking at raising about 8,500 crores soon enough. So plenty of headlines around Zomato, apart from the fact that Mr. Dipinder Goyal is looking to employ someone where the person has to pay the first year salary. That's a separate social media, great viral debate. But I think plenty to keep us busy today, Nigel.
Well, that's right. I want to see the end. I'm looking at the ends on two factors. One is on the markets and one is the match. The India versus Australia match is going according to plan. We require only 6 wickets and there are 500 runs to get for the Australians. So that's going well. Hopefully the markets as well. We end well today. So the markets, they sniffed, that it's going to be a good showing coming in from the NDA, and that it was. So part of the good news is in the price, but I'll tell you what, the magnitude of this win wasn't really priced in. So that's something that maybe could help us move a little bit higher even from here on. The other point is, this market had become a bit of a short on bounce kind of market. In the near term, could we have formed a near-term bottom at around this 23,200 odd mark, which was the crucial support? And today we're going to gap up. So maybe that short on bounce trade, that takes a bit of a breather in the near term. And a solid close is what the bulls would want. The start is going to be good, but at the end of the day, you'll want us to end closer to the higher point of the day rather than come off the day's high. Let's talk about two factors though. Yes, the BJP has performed very, very well. Yes, things are looking up as of now. But two factors need to cool off. One is the FI selling, which is showing signs of that. It's come down to sub 1,500 crores odd. Hopefully, with the cues that we have, hopefully that number stays subdued or maybe it turns around as well. And the dollar index, overnight it went to around 107.5, which wasn't very, very good. The good news is it's come off close to around 0.5% from the top. So I'll keep an eye out on both these two factors because these are the global cues. What happened in Friday's trading session though? Why did we see such a big bounce? There was a massive short covering bounce that did play out. The shorts covered out close to around 18,000 contracts. Long addition close to around 30,000 contracts. The swing factor out there more than 45,000 contracts, telling you the kind of short covering bounce that we see. And that was the power of short covering. Though the shorts continue to remain at around 67%, 69%, it's come down from close to around 78, 79% odd. Let's pull up a couple of bars now to tell you about the magnitude of the shorts that were covered in the system. You had the shorts at around this 2 lakh contracts, the FI net short positions. In a single trading session, it's come down to around 1.5 lakh contracts. So there was a big short covering bounce that played out there. But also keep an eye out on the client positioning because they have been net long on the index. But in Friday's trading session, they came off, from the top. So the clients, they booked some profits. 2.5 lakh contracts, 2.8 lakh contracts, net long positions is what they had, which came down to around 2.4 lakh contracts or thereabouts. In terms of the options data, the 23,900 call, that was fairly active. I want to see what happens out here. The premium was around 200 rupees. If the writers will have to run for cover, going by the kind of gap up that we're looking at. So that's going to be the important strike that I'll be looking at in today's trading session. Levels come up for you on the screen. You'll want to close closer to around the 24,200 odd mark, which becomes a bit of a resistance zone. The 20 DMA will be crossed in the gap up, but you'll want to end above this level. And this near-term support comes in at around 23,500. The Nifty Bank as well will be charging ahead today. It'll cross the 20 DMA. Last week, it crossed the 20 DMA. It couldn't stay above that level. So that's going to be important. And then you'll want to look at the 50 DMA and other levels as well. Stock that I'm looking at is Zomato. It's made its way into the F&O market. Now it's made its way into the Sensex. The bigger cue, though, is it could possibly come into the Nifty in the next couple of months. So that's why Zomato will be a stock. Right place, right sector, growth opportunities out there. But we'll have to keep an eye out on this one because the probability of going into the Nifty goes up as well.
Okay, all right, got it. So lots of interesting stocks in focus and now know the levels to watch as we're all gearing up for a gap up open. So let's kickstart with the equity call of the morning. Rajiv Batra of JP Morgan expects equities to rebound post-state election results, reflecting renewed investor confidence in the government's economic policies. He says this will support mid-caps as well, considering the indices provide higher exposure to sectors aligned with government policies and themes. Hence, they are closing their tactical cautious stance on mid and small caps post gradual correction since September end. Furthermore, he expects decent recovery in the second half of FY25 earnings. Rajiv says the key themes to focus on due to policy continuity are power up, which is engineering and construction, EMS, indigenous defense, corporate creditors, and power financiers, waterways, and capital market plays. Very interesting. Closing their tactically cautious view on mid and small caps. That's JP Morgan.
Okay, well, there's Mahesh Nandurkar of Jefferies who is weighing in as well. He says that BJP's resounding win in the Maharashtra elections boosts political stability, a market sentiment positive. He says cash transfers, populism remains on the rise, with such schemes credited partly to the incumbents winning state elections. Mahesh adds that already at 0.7% plus of GDP and some large states yet to join in, a consumption boost is likely. Large states yet to join in terms of these schemes, income transfer schemes. He goes on to say that expected pickup in government spending in the second half and improved liquidity conditions are helping credit conditions, and they should improve economic data points as well. Okay, well, Ed Yardeni is with us, President at Yardeni Research. Ed, good morning. Great to have you with us here as always. Thank you for your time. Prashant this side. I mean, of course, there is the local state election, which is providing a big boost. But I want to start with what's your take on Mr. Scott Bessent, the Trump's nominee for Treasury Secretary. Dollar is down 0.5% this morning.
Well, I think that's not a reaction to Bessent. I think there's a perception that he's a solid citizen, that he's certainly knows a lot about markets. And when you're at the Treasury Department, it's, I think, extremely important that the person in charge has a lot of experience in the capital markets. So I think we're in good hands. I think he'll be relatively conservative compared to perhaps some of the policy initiatives that Trump would like to propose. But he's obviously going to go along with the program, and so odds are that he will, pursue the tariff increases that Trump is proposing. But all in all, I don't think the dollar's down because he was appointed. I just think, we've had a heck of a move in the dollar, and it's easing off a bit. That's all.
So 107 on the index, dollar index, you think? Because last time as well, we came around these levels and then the dollar, we had a bit of a pullback. So this is it? Or so majority of the Trump thing is priced in the dollar?
No, I think the dollar remains strong. I mean, the reality is the European economies remain awfully weak. We saw that in the recent purchasing managers indexes. I'm not convinced that the stimulus programs that China has implemented do much to lift their economy. Maybe it'll kind of provide a floor, but I don't think you're going to see the economy doing much better, simply because their property market is still in distress. But again, maybe it just doesn't get worse, but I don't think it gets a lot better. And meanwhile, I think the Fed is going to increasingly signal that they're not going to be lowering interest rates anytime soon, that they may very well pause in December and into January and into March. And the reason for that is the economy is doing extremely well. Inflation is moderating still. And at the same time, the Fed has to start incorporating the likelihood for fiscal policy. And under Trump, we could have some inflationary pressures from higher tariffs. Under Trump, we could have some inflationary pressures from a stronger economy. So the Fed has to concede that and reflect that in its monetary policy.
Hi, Mr. Yardeni. Good to have you on. So if those concerns are going to play out, which means that the Fed is not going to be as charitable as we previously thought, for the reasons that you mentioned, then is the equity markets optimism well placed? I mean, equity markets are getting into, December Santa Claus mode already, whereas other asset classes like gold, like oil for that matter, are showing greater concern with respect to geopolitics, and other such situations. What do you think? Is the equity market rally going to be intact?
I think the fact that so many assets are in fact rallying suggests that we're getting into sort of a melt-up mode, rally mode that's partly Santa Claus and partly 1999 all over again. So I think that the valuation multiples in the stock market are stretched, but the U.S. economy is doing very well. The Fed really doesn't have to lower interest rates here because of the resilience of the economy. Earnings are going to continue to be surprisingly strong. And so I think we can have an earnings-led melt-up, which really isn't a melt-up. Usually a melt-up is followed by a meltdown. But if earnings are going to be pushing the market higher, that's fine. But I am a little bit uneasy that so many asset classes are going vertical here. That suggests that there may be too much optimism, too much euphoria, and that there could be some reason for a correction next year. And of course, there's a lot of moving parts to Trump 2.0, and we don't know how they're all going to interact. It's like a patient taking some medicine and it seems to work, and then all of a sudden they're taking another kind of medicine and it seems to work, and before you know it, they interact in a way that nobody expected. So that's some of the concerns I have about 2025.
Unexpected from President Trump, so we'll stay tuned to that. But Ed, the Indian markets have relatively underperformed just in the recent past, the last 45 days to around 2 months or thereabouts. At current positioning, how would you rate the Indian markets? In comparison to what's going on in the United States, that Chinese stimulus hasn't really played out according to what most market watchers were awaiting. So where does India fit into the scheme of things? We've seen a bit of a correction. Our earnings have been a little bit weak. But as you have said in the past, we are a strong economy and headed up in the longer term.
Yeah, I think at the end of the day, what matters is the economy and whether the economy is growing or falling into recession. There's no reason to believe that India is falling into recession or anywhere near a recession. Same goes for the United States. China, it's a little less certain. I mean, I think in some ways they are in a recession, and maybe all they're doing is stabilizing the situation. As I said, just kind of making a bump in their economy, but I don't see a lot of upside anytime soon. So I think when global investors look at the fundamentals are good in the U.S. They look very good in India as well, not so good in Europe, and uncertain in China. So you put it all together, and I think what you just saw in India was a correction. I think the election results suggesting political stability and more certainty about where macroeconomic policy is going to go is obviously a positive for the Indian market.
Okay, and yes, we are expecting the Indian market to react to that big win of the NDA. Let's see what the verdict is. Thank you very much for joining us this morning and and giving us those insights. Well, with that, we have to quickly move on. Let's tell you what's lined up on the show today. It's a power-packed lineup as always. At 8:30, we kick it off with Prakash Diwan. He'll give us some fundamental stock ideas. We'll get talking about some of the major stocks in news today. At 9 o'clock, Apurva Prasad of HDFC Securities joins in to talk about the big IT move, the best performing part of the market in November. So what lies ahead? At 9:20, we have Manish Sonthalia with us of MK Investment Managers. He's our market master of the day. At 9:30, we'll be speaking with the management of CAMS to talk about the record equity inflows that are coming through, almost 42,000 crores in October, and what that means for CAMS business in the second half. After that, it's spotlight on Maharashtra with this big NDA win in the state. What lies ahead for the real estate space in the city of Mumbai and in Maharashtra? Gulam Zia of Knight Frank and Bowman Rustam Irani of Keystone Realtors would be with us at around 9:40. At 9:50 a.m., Sudipta Roy of L&T Finance joins in to talk about the company's growth prospects as L&T Finance completes 30 years of operations. Towards the end, our special segment coming up with Lata, Indianomics. Today, she'll be in conversation with Santanu Sengupta of Goldman Sachs to talk about some key macro trends.
Well, we need to slip into that short break, but we've got a lot of stocks specific action lined up for you. We'll get to that in just a bit. For the time being, run you through the list. Zomato, SBI Cards, Auto Pharma, CESC, HG Infra. All of them will be reacting to positive news flow. Add to the list Time, Technoplast, RITES, as well as Mahindra Lifespace. On the flip side, JSW Steel and Olympic Pharma will be reacting to negative news flow. Slip into that break, come back, we'll go full tilt on all these stocks.
Welcome back. You're with us on Bazaar Morning Call. The cues are positive. We're expecting the start to be on the positive side. Look at that implied open, and that's a major gap. So let's see if indeed it turns out to be that way. But the short point is start is positive, and then we'll see what happens from there. Time to talk individual stocks. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, happy Monday to all of you. Lots of names on the radar. Vivek, I think we have Vivek there. So let's start off with Zomato and JSW Steel. There's going to be a swap on the sensex. I think December 23, Vivek?
Absolutely right. Good morning. That's right. So Zomato will come into the BSE Sensex index, and this will be at the cost of JSW Steel. Now, as per IFL Alt, the flow estimates for this particular swap, Zomato is expected to see inflows of a little over $450 million, while JSW Steel will see outflows of around $250 million. Like I said, changes will be effective at open of Monday, December 23rd. So the preceding Friday is when the actual adjustments will take place in trade.
Okay, all right. Thanks a lot for that, Vivek, and good to see you back. And congratulations, a couple of breaks even on leave. So well done, Vivek. And I believe there are a couple of more this week. So let's stay tuned for that. Thanks, Vivek, for that. Well, let's hop across to Abhishek. He's here to tell us about SBI Cards. Morning, Abhishek. Hope you had a good birthday over the weekend.
Well, the birthday was good. I think the festive season has been strong with respect to credit card momentum that you are seeing in October of 2024. So card issuances growth rate is coming down. It has now come down to 12.9% YOY and about 0.7% sequentially. But what's heartening to see is the spends that have increased massively. So spends have increased massively by 14.5% month on month, which is a very strong number. Average ticket size hence is up about 13.7% on a month-on-month basis, and SBI Card also saw increase in its market share on spends front. So card issuances for SBI Card was up 9.6% YOY and about 1.1% on a month-on-month basis. Spends are down 10% YOY, but they have increased by 14.9% on a month-on-month basis. So average ticket size is up 13.5% month-on-month. And if you take a look at their market share with respect to cards, it's at 18.53% versus 18.46% on a month-on-month basis, and even the spends market share has increased to 15.78% versus 15.72% in the previous month. So you can expect a bit of green on SBI Cards today. Back to you.
All right, some improvement at the margin. Abhishek, thank you very much for that. Well, let's move on and let's look at Aurobindo Pharma and Alembic Pharma. Sudh is here with details. Good morning.
Morning, Prashant. So it's a bit tough to talk any negative news for today, as GIFT Nifty is indicating a start for our market with a gain of more than 400 points. But nevertheless, first one is Alembic Pharma. US FDA has issued 5 observations for its solid oral formulation facility at Jarod in Gujarat. And remember, this plant was inspected from November 14 to 22, 2024. But company says this was a scheduled good manufacturing practice inspection, and it will provide all the details to US FDA in a stipulated time. Before this plant was inspected in December 2022, and US FDA had cleared and issued establishment inspection report in March 2023. But again, this plant is in focus. Next news is about Aurobindo Pharma. Company has signed collaboration license agreement with a global pharma major for respiratory drugs. Due to confidential issue, company has not named about the global pharma major, but it says overall investments for this agreement to be capped at $90 million. That $90 million investment will be made by the company, and before this upfront payment, company will be making of $25 million, and this deal would be for 3 to 5 years, where both companies, that global pharma major and Aurobindo Pharma, will have exclusive rights to develop the products, while this global pharma major will be manufacturing the products. So Aurobindo Pharma green and Alembic Pharma red.
A mysterious global pharma company. We'll have to wait to know the name. All right, got it. Sudarshan, thanks very much for that. Back to Vivek. Vivek, you're watching out for CESC and HG Infra, I believe. What's the news?
Well, good morning. That's right. So when you're talking about CSE, it's an important development. Now, the company, this has been in the works for quite some time. It was delayed due to various regulatory hurdles, but now all of them has cleared. The company's subsidiary, known as Eminent Electricity Distribution, has received the LOI for acquiring a 100% stake in Chandigarh Discom. So there has been a privatization of Union Territories Discoms, and CESC has now won the entire Chandigarh Discom. What was the CESC acquisition bid? At close to 871 crore. This is an important Discom in terms of, number one, concession period of almost 25 years, number of consumers 2.4 lakhs, energy bill at close to 1.6 billion units, and tariff for this particular Discom is at 5.61 per kilowatt hours. Now, when you're talking about this particular stake, look at the valuation. It's around 3.5 to 4 times the current regulated equity of a little over 200 crore rupees. So it's a good deal as far as CSE is concerned, expect some green in the stock today. Now, talking about Edgy Infra, an interesting development here as well. Company has received a letter of award from NTPC Vidyut Vyapar Nigam. They're going to set up close to 500 megawatt, which is availability of close to 1000 megawatt hour standalone battery energy storage system. Order size again of 181 megawatt, availability of close to 370 megawatt hour. Completion period that the company expects is close to 1.5 years. Tariff rate at almost 2.38 lakh rupees a megawatt per month. So again, positive development as far as Edgy Infra is concerned.
All right, Vivek, thank you very much for that. More stocks with news flow. Vamakshi standing by with that list. Vamakshi, morning.
Well, good morning, Prashant. Let me first start off with Time Technoplast, expecting a green on this counter, and that is because they've received approval from PESO, that is Petroleum and Explosive Safety Organization. This is for manufacture and supply of high-pressure Type 3 fully wrapped fiber reinforced composite cylinders. These cylinders will be used for storing hydrogen to power fuel cell-driven unmanned aerial vehicles and drone applications. And this is a significant development because it is the first company in India to get such an approval. So going with the green for Time Technoplast. RITES is another counter that is expected to open higher today, and that is because they've received revised estimates for its railway electrification project from Northeast Frontier Railway, and the revised total cost stands at 532 odd crores as compared to 288 crores seen earlier. Mahindra Lifespace going with a green for this counter as well, and that is because its unit Mahindra World City Developers has announced the second phase of its industrial parks project in Tamil Nadu in partnership with Sumitomo Corporation of Japan. Additionally, a supplement agreement has been signed for investment of 225 crores, which will be made by Mahindra Lifespace's unit and Sumitomo in Mahindra Industrial Park Chennai in proportion to their shareholding.
Okay, all right, Vavakshay, thanks a lot for that. Well, let's do a quick recap of all the top stocks we covered for you. The ones with positive news flow include Zomato, SBI Cards, Auto Pharma, CESE, HG Infra, Time Technoplast, RITES and Mahindra Lifespaces. While stocks with negative news flow include JSW Steel and Olympic Pharma.
Okay, well, we'll take a quick commercial break here. But on the other side, you'll hear from Prakash Diwan. We talk about specific stocks. And we'll also have Peter Maguire, CEO at Exim Australia, to discuss the surge in oil prices. Stay tuned. That's coming up.
Welcome back. You're tuned into Bazaar Morning Call. Well, let's get chatting about a couple of stocks and what you should buy or sell. Prakash Diwan joins us to help us out with just that. Hi, Prakash. Good morning. Good to see you, Vin. Well, it's going to be a gap up opening, but stocks and sectors is something that we're looking forward to. So given the kind of verdict that the ruling NDA has got in a key state like Maharashtra, what are the themes that you would play on the back of this? We've seen the markets already rallied. But, infra push is likely to continue, maybe cement consumption, real estate as well. What's your top couple of picks that you have post this verdict?
Good morning, Nigel. So, no, absolutely. I think this is an event that would probably, make a lot of people relook at how things are, especially on the consumption side, on the government capex side. And, going by that, the confidence that the government, the central government would have in terms of pursuing its expansion policies. I believe real estate definitely is one of the things. There's ease of business that's likely to change. There's visibility of, project completion that will come in. Probably the Dharavi project will actually speed up in a big way. And of course, remember one of the key elements of the infrastructure growth in Mumbai, which has been very critical or is likely to be critical, is the airport, the new airport. My sense is, if you look at some of these themes which immediately arise out of that, and there could be some which will probably be long dated, there's absolutely no doubt that real estate, so the likes of Brokerage property, they own one of the largest land banks and have the potential to develop that at a much faster pace with realizations getting much more visible. If you like airports, you could buy some of those names, but you could buy airlines, which will, remember, one second order impact of a good airport infrastructure in Mumbai is going to be the lowering of costs, affordability for operational efficiencies coming in for a lot of airlines. If you're adventurous enough, you could look at Spice, which is turning around, but Indigo at 4,000 odd levels also makes a great buy. So I think the themes are fairly varied and broad-based, but as policies get announced, it start getting to be crystallized much more sharply. But I don't see any reason why beneficiaries of the Dharavi rehabilitation project would kind of not benefit. Companies which are into water and pipe infrastructure and all of that out there.
You want to name a few, Prakash? From.
So I think one of the key players there is Welspun in that space that I spoke about. So that is something which you could definitely look at. We've spoken about that, how it's reshaping itself and reinventing. Welspun could probably benefit, but these are, as I said, these are of course subject to policy announcement in terms of the timelines that would take for execution. But these are companies which are already there and would benefit tremendously once acceleration happens.
Prakash, since you spoke about Welspun Corp, I'll tell you what, we'll try to invite the management sometime during this week and try to understand further details. So, we'll try to get into further details on that, how it benefits them with regard to this Trump trade, as well as the continuation on the water pipe.
All about pipes, both here and in the US as well. Paytm, I saw some news flow at the bottom of the screen, and we'll have to check whether it is significant, how significant, because there's immense interest in the stock. It ended 6.5 higher on Friday. And through this market correction, I mean, the Paytm stock did not fall very much at all. That UPI Lite 500 rupee top up without PIN, I mean, we'll have to just see for if it's a significant sort of relaxation incrementally. Is it meaningful for Paytm as a business? Prakash, morning. What else are you looking at? Anything specific out there? I mean, you're always one for bottom-up ideas. Anything on your radar with what has happened? All the flux over the last few weeks.
Yeah, good morning, Prashant. No, so I think what the market's probably giving you as an opportunity, if I really were to look at before I drill down into stocks, is people who probably missed out on exiting some of the themes that seemed overstretched and the price volume action indicated that they were caught on the wrong foot. Probably you get a chance to clear that. So this is another. In engineering days, we used to call it ATKT. This is one of those, you didn't get out of the market in time. The market's giving you one more hurrah. Why I'm saying one more hurrah is more for the fact that global macros haven't changed dramatically so favorably. It's going to be a while before that stabilizes. So this is a very localized event that's propelled markets. And my sense is you will see, go back to results season. Look at which are the pockets where things have started improving. And one of the stocks, for example, which has turned the corner is Syngene. We haven't spoken much about Pharma because generally it sounds boring in a market that's momentum driven. But we particularly like this name. There's another new name in the pharma space, which is Indigene. I'm talking about stocks which are, this is not probably the ideal day to talk about pharma stocks because you have a lot of cap goods, infrastructure, government spending related buzz, which is there in the market. But on a bottom-up basis, these are some of the names that could do exceedingly well, given the kind of runway to growth that they've ahead of themselves. And remember, they've also consolidated over the last 6 months in a very healthy way. So, and if there's a time correction, it just gets better.
Okay, all right. So those are some of the ideas you can work with as we look at trade this morning. Prakash, stay on. We'll have more questions for you in just a bit. But let's also take stock of the commodity cues. Like I was saying at the start of the show, it's very, very interesting because some of the commodity rallies, like crude, for instance, or even gold for that matter, they seem to be taking geopolitics more into account than equity markets. But we have the expert with us now, Manisha Gupta, in the house with a roundup of the latest from the commodity space. Manisha, good morning and happy Monday to you. So what should we keep on our radar?
Oh, well, absolutely. There's just so much happening as we've started Monday morning. China, for one, their monetary policy meeting has just come through, and the one-year midterm loan facility is steady for a second straight month onto this one. I'll start with the crude oil prices because we saw more than 5% of gains in the previous week. Crude is trading at a 2-week highs right now. The intensifying conflict between Russia and Ukraine has been supportive, and then the U.S. Could be looking at imposing additional sanctions on Russia's Gazprom Bank, and that is what is supporting markets. U.S. also is looking to ban imports from 30 more Chinese companies. You also are looking at Iran getting impacted if Trump tightens sanctions going forward onto that one as well. So the markets have started to read into a lot of these things, and that is where we are looking at support coming in from. So earlier, there were expectations that you could see 70 break on the lower side as well for Brent, but a Goldman Sachs report now says that the prices are expected to stay between 70 to 85 for most part of the next 8 to 12 months as well. And you mentioned about gold. Well, yes, 5.5% of gains of the previous week, best weekly gain in 2 years. And that's the kind of gains that we've seen come in for silver, many of these metals as well. With the dollar index down 0.5% in the Asian markets right now, you could be looking at some more buying support.
Okay, all right, got that. Manisha, thank you very much for that. By the way, that's interesting news coming at the bottom of your screen, and from the point of ease of doing business, this could go a long way. It's something the tax fraternity has been asking for, that India have its own sort of arbitration mechanism, an arbitral tribunal of some sort, perhaps to settle tax litigation and not to let things drag on in the courts for too long a time. And our colleagues are reporting that perhaps something like this could be in the works, and the government could be considering it in the upcoming budget. So just some of the additional news to keep on the radar today. But back to commodities, and Manisha was talking about the surge in crude oil prices. So let's take that forward with Peter Maguire, CEO at XM Australia. Peter, great to have you. Thank you for joining in, and good morning to you, maybe afternoon now your time. But that's the thing, you know, this big surge that we've seen in oil prices. Clearly, the oil market is looking at geopolitical risk very differently vis-a-vis the equity market. Do you think there was maybe too much of sort of risk premium built in, or was it justified? And where do you see the range, say, for the next couple of weeks?
Well, good morning, Surabhi. Yeah, it's afternoon here, and I tell you what, it's been a dynamic week, building on what Manisha mentioned. Friday night was strong as far as NYMEX and Brent. So that was a good sign. It's given up a little bit in Asia trade this morning. But that geopolitical, as your question, you know, the geopolitical risk premium, it's starting to build. You've got Russia's situation, what they're doing with U-men and trying to get mercenaries into Ukraine. So this is going to be very fascinating how that all, you know, rolls into the big equation as far as risk premium. And I would expect that risk premium will probably build over the rest of this week. We'll just have to wait and see if there's any significant escalation in tensions between these parties. So I think December is going to be a very hot market for crude.
Oh, what's the range? Any numbers on the board? Something you'd like to put out? Rough range, rough guess.
Well, it's got to be more than 75 for Brent. If things, and which wouldn't be surprising if things move up from an escalation standpoint from here, then you'd have to add more dollars to risk premium, Surabhi. So I would think that possibly you're going to be nudging that 80 sort of number for Brent, which is not a good sign for consumers. And WTI, more than 75. It was testing 71.50 on Friday night, and it's given up a little bit in Asia trade this morning.
Quick word on whether or not the Aussies have a chance at the WACA?
I knew this question was coming.
Nigel, what a silly question to ask. You know the Aussies are playing home territory, and we've got to give you guys a bit of a start.
I hope, for a closer fight today. But, on Friday morning, Peter, you would be asking me this question, and you would be grinning corner to corner. But I'm feeling quite good today. 4 wickets down, 6 to go. You all have got nearly around 480 runs to get. So wish you all the best, mate.
Well, I've got to stay positive.
Absolutely. What about, will you stay positive on steel as well? We saw prices move up, and then off late again, the prices have come down, the Chinese steel prices. What's going on there? The worry is the way China is exporting steel. And we have a strong pitch from the domestic guys here in India who want some kind of protection because they are exporting steel to all parts of the world. What's the range on steel?
Well, this is the question because, from a domestic demand standpoint, China and what we've seen as far as trying to re-stimulate their internal engine and then exporting, well, the world's using as much steel as possible, from building to every form of construction. So where it runs, I think you're going to see, again, volatility play into that whole sector. There's been no real strong breakouts if you're looking across some of those base metals. They've had a little bit of a rally to the upside, but nothing startling. And still iron ore's well back so from its highs that we experienced, earlier in 24. So I think you're going to see volatility again for Q1, and it's hard to put a price on, where you're going to see some sort of floor. But I think that it's going to be very much a hot traded commodity. And keep an eye on the steel and iron ore and naturally the other industrial metals.
Right. Peter, any thoughts on the price of gold? Bitcoin is around that landmark 100,000 levels. Gold, of course, has also been doing very well.
Well, exactly, Prashant. I mean, it's had an astounding couple of weeks, and it was sold off after the Trump president's election came under some pressure, and US dollar had a really big rally to the upside. We saw that, and gold took a hit, but moved and it recovered very strongly last week, up 5% as the chart says, as your slide says. So I think there's more upside for gold. Central bank buying, their appetite is incredibly strong. And I feel as though we will test probably all-time highs sometime in December. Keep a close eye again on US dollar index, what's happening as far as ECB and, of course, the Fed in December, all of these factors. And if you see geopolitics ramp up, then that's going to be, that's really going to put a solid boost onto gold, Prashant.
Yeah, absolutely. I mean, it's taken a bit of a breather today, this morning, the dollar index, but otherwise, we've been tracking above 107. So, yeah, I need to watch that situation closely. Great chat, Peter. Thank you very much. And may the best team win. I'll end with that. Have a great rest of the day.
Thank you,
Thank you for joining in.
Very good.
Thank you. All right. With that, we do have to take a very quick break, come back on the other side, and then we'll have our technical experts joining in, Mitesh Thakur as well as Shilpa Rao, to look at today's trading setup and a couple of technical trading ideas.
Welcome back. Let's get a technical check on the markets. We have Mitesh as well as Shilpa Rao who join us. Good morning, lady and gentlemen. Thanks a lot for joining in. Well, Mitesh, I recall a couple of sessions ago, you said it's the time to short the market is done. Cover your shorts and then, look to gradually build on to those long positions. What's your take? We have got a good bounce in the recent low. I think 23,300 was the low. And this morning, we're likely to start off closer to around 24,200, going by what the GIFT Nifty is suggesting. How do you trade the index? If you had a long position, book out and enjoy the rest of Monday? Or would you trail your stop loss now and say this market wants to test higher levels?
So, good morning, Nigel. I think, going forward, the key question is whether you want to buy after such a gap up. I think this kind of gap could change the short-term trend, and we were already seeing signals from the extreme oversold positions on the indicators. But you don't know what to do after a 400-point gap up. So the level which I'm watching on the Nifty on the upside, they are close to about 24,350 on the spot, and then 24,490, 500 levels. So maybe if you have long positions, and which is what we had been suggesting for on the session on Friday, I think it would be a good idea to take part profits and trail your stop loss and see how the market reacts post the gap up. If there is a pullback of about 70, 80 points and then, again buying signals emerge, I think it might be time to take fresh longs on the index as well. So I think that's the way we'll approach it. But yeah, the good thing is that while, we were not aggressively long, we had covered our shorts. We had suggested some long positions. So there's selective long positions, which we are also carrying as a disclaimer. And there is clearly interest on the upside. The only thing is that post a 50-point gap up, you might want to tactically see how the first 10 minutes of the markets happen in the live market. Market reacts in the live market.
Yeah, looking at the GIFT Nifty, you're going to open right into that 40-day exponential, which is, as you said, 24,350, basically. So, yeah, there you go on your screen now with that 430 odd point uptick. Mitesh and Shilpa, good morning. Shilpa, what about you? How are you looking at the setup? Indices first?
Good morning, Prashant and Nigel, and thank you for having me on the show. Talking about the setup, the FIS data, if you see the net longs have improved significantly to 31% now. From here, I believe, they can improve this towards 45%. So in this case, levels of 24,500 to 25,000 zones is where, you will be seeing the next target happening. So the gap up today is very massive. So we just have to wait if 24,000 zones are held. If yes, then, you're looking for targets at 24,800 to 25,000 in coming days. Talking about Bank Nifty also a positional trade with a stop loss of 50,000 from here can be, worked upon, where levels of 53,000 to 53,500 can definitely be achieved.
Okay. All right. Got that. Shilpa, as well as Mitesh. So we're expecting higher levels. Let's see how this plays out. Let's also talk about individual stock strategies. Mitesh, morning. So which ones would you go with today?
Good morning, Surbi. Given the kind of and the scale of gap up, it has to be our long positions, but then, difficult to figure out where the stock will open and how will you place the stop losses, but I've made an attempt. Hero Motors is something, which I recommended regularly last week, Wednesday, Thursday, Friday. I think all the 3 days I had a buy and I'm continuing that because the stock after a gap up was just sideways, but it's clearly showing signs of reversal on the indicator chart. So look for targets of 49.95,000 here and buy with a stop below 47.40. Similarly, iShares, I would want to recommend buying with a stop at 4950, 4945 and a target of 5,200. BHL is the next stock on my list, looking at a target of around 248 to about 250, and let's see where it opens. Assuming it opens around 237, 239, I think you can keep a 4 or 5 point kind of a stop loss here. And similarly, Bajaj Finance, looking at a first target of 6825. And again, placing a stop loss is slightly difficult, but what I would recommend is, possibly start with a stop loss of around 66.50 and then see, once the market opens, we'll probably figure out a fresh level for a stop.
Shilpa, what about you?
I have 2 buy recommendations. The first one would be in IGL. IGL, if it opens above 320 and sustains, it's a very good buy for targets of 350 to 370, 380 zones. The other one would be a buy in Trend. Trend has been consolidating for the past 7 to 8 sessions in the range of 6,200 to 6,500. And a decisive breakout has been, given here. So till it sustains 6,500, I believe the stock can do 7,000 to 7,200 in coming sessions.
Thank you both for joining in. Appreciate your time here on CNBC-TV18. We'll speak again, 9-10 calls. I mean, GIFT Nifty should come up on your screen. And I just want to say this, that, a lot of, social media, etc., a lot of commentary over the weekend, last 2 days, because I guess markets had and participants had all that much time to focus on what the market will do, how big will the market rally be, whether things have reversed, etc. The fact is, even if you're long, great, as Mitesh said, maybe better to take some part profits off. But if you're not long and you already have, your portfolio, that portfolio will be up. As this is a broad up move this morning. So, don't allow FOMO into the equation in terms of chasing some of these moves higher. Because, after a 1.5%, 2% kind of a gap up after the 2% rally on Friday, you got to, at least in the very near term, look at risk rewards, etc. Irrespective of whether one gets a chance to get in or not, what you own goes up in value, and I think portfolios will be feeling better. We'll take a quick commercial break here. We're going to come back. The pre-open on the other side. Apurva Prasad, research analyst, IT sector at HDFC Securities, will be with us. Stay with us. Okay, welcome back. The pre-open session, of course, is kicked off, and the first rates are coming up on your screen around that 400-point gap up level, 800 points, and the sensex is where we are finally starting to trade. So 7-8 minutes, and we'll have the final rates starting to settle down. We'll look at stocks as well. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, good morning. Good to have you with us here. I think the question for traders is, if you get that gap up, what do you do? And it's, of course, also only relevant for those who already are long. Because otherwise, tough to get a chance in, tough to get a word in with the 400-point gap up. Your thoughts, Chandan?
Good morning, Prasad. Thanks for having me. So if I look at the entire market setup, Nifty had corrected by more than 3,000 points from 26,277 to 23,263. And 38.2% retracement comes at 24,444. So according to this retracement concept, I'm expecting this bounce to extend to 24,444 and max to 24,750. The good part is that index is negating its lower top, lower bottom on weekly scale of last 8 to 9 weeks. So because of the negation, some short covering trigger could be there and short-term trend could change, followed by buying signal for most of the indicator. So view is here that till it holds above 23,800 or 24,000 after the opening, use any small decline as a buying opportunity, and this leg has potential to extend till 24,444 to 24,750. If you get the market at higher levels, don't go with naked options, go with bull call spread and other strategy. Talking about the Bank Nifty index, Bank Nifty has negated its lower top, lower bottom. It has measured support at 49,650 to 50,000, and that is working well from last 23 weeks. From last 35 trading sessions, the Bank Nifty has been moving in between 50,000 to 52,500. Recently, it has taken support at the lower band, so it can go to the upper band. So accordingly, with support of 50,000, Bank Nifty has all potential to extend the rally towards 52,500. After the gap up opening, if it witnesses slight decline, then one can go for buying. Otherwise, go with spread or bull call spread or bull call butterfly kind of strategy, where one can take a small risk to get some positive momentum of the market. Better to be in the stock specific. Selective stocks are likely to do well in this market scenario when index recovers from the lower zone. So first trade is buy on Indian Hotel. Stock is holding well. Major trend is positive, making higher tops, higher bottom. One of the strongest name in this market. So recommending to buy with support of 777 for an upside target towards 840. Second trading area, that is buy on lower slip. It has formed a strong base at 475. Major trend is positive given a consolidation breakout. Longs are being added. So for an upside target towards 540, one can buy with support of 500 zone. Last trading area, there is buy on Ramco Cement. Most of the cement stocks are doing well, and Ramco has given a fresh breakout and broken all immediate barrier. We have seen a volatility crash from 38 to 27, which also indicates the positive momentum. Open interest addition is around 27%, which also indicates further surge in the counter. So one can buy with support of 925 for an upside target towards 1,000 marks in Ramco Cement.
Okay, all right. So lots of trading ideas there. Thank you very much, Chandan, for joining us. As always, you have a good trading day yourself. Today is also important from the policy perspective because the winter session of Parliament kick-starts today, and obviously the ruling NDA is going to be entering that session on a high with the big Maharashtra verdict. We have Parikshit joining in to track the highlights. Parikshit, apart from all the politics around it, I guess there are a lot of bills, including the Banking Laws Amendment Bill that comes up in this session. Hi, Parikshit, can you hear us? Okay, no, I don't think we have that line through, but we will go back to Parikshit because, like I said, there are lots of interesting bills that are coming up, apart from all the usual politics that will happen around some of the more contentious issues. But for the time being, let's shift the spotlight to the IT sector. Like we've been telling you, the IT sector has been the best performer of November. This index has galloped about 7.5% in a month where the Nifty has more or less been very range bound. And that run continued last week and on Friday as well. For the year as a whole, let's pull the one-year picture. It's been a stellar ride, almost 20% plus on the IT index. Now, has the Trump news given the IT index a fresh lease of life? Can there be sort of more upsides ahead? Let's get that going with Apurva Prasad, who looks at the IT space very closely. He's from HDFC Securities. Apurva, good morning. Great to have you on. And that's the real question, right? The dollar keeps rallying, which, at a very fundamental level, intrinsically is good news for these exporters. But the bigger issue is that is it better business times ahead? As President Trump is expected to be inflationary, a lot of US companies, US-facing domestic companies are doing really well. What's your sense?
Yeah, it certainly seems that better business times are ahead. And I say that because there's been a lot of pent-up demand that could start to get released. So we do expect growth to accelerate. We've been saying that it's bottomed out about 2 quarters back or so. So we are somewhere about mid of that recovery, and in about 2 to 3 quarters, this growth should get back to a normalized level of high single digits. So that's the trajectory that we're looking at. Having said that, even if you look at from a profit growth standpoint relative to the market, where you see the overall benchmark earnings growth is receding, you're seeing IT sector move from mid-single digit earnings growth towards high single digit, which is where it's already achieved that in the second quarter. So I think the relative case is there, the growth acceleration, and I think a greater certainty of this happening. And case in point being is that this is happening despite any mega deals. So there is a lot of discretionary spend. I think that's helping growth improve from here.
But Apurva, the question is, isn't a lot of this already baked into prices? Look at this year. Forget the November rally. This year, the Nifty is up about 12%. the IT index is up 22% in just the calendar year. So isn't the whole hope of this turnaround, higher earnings, isn't much of that already in the price?
Yeah, so yes and no. I mean, look, in times of uncertainty, you also pay a larger premium for defense. But at the same time, you're right that there's an amount of re-rating that has happened in anticipation of that. Having said that, yeah, we do believe that returns from here is going to be sort of more a function of earnings growth. So within the bigger ones, for example, we expect one-year returns between 5 to 15%. So it's going to be modest returns after this re-rating that we've seen.
5 to 15%, Apurva, you've got around 7% on the index in last 1 month. So building on that as well would not be such a bad outcome, because in a month or so, I think there's a big outperformance. Apurva, according to you, Trump is good or bad for tech? Because you don't know which side of the bed he's going to get up on. But, earlier there were problems with regard to the H-1B visas, which broadly, I think the IT companies have adjusted to. But some part of the street is making this argument, that there are going to be tax cuts, so high amount of spending on tech and more on the services side. The other argument is that the dollar is likely to be stronger, which invariably is good for the tech space. So which side of the argument are you on?
Yes, I think it's going to be positive. It looks at the outset, it looks certainly to be like that, Nigel. Look, the reasons that impacted the sector previous time Trump was in, those reasons are not there right now. So supply side H-1B related factors, those are unlikely to be risks in the current scenario. Having said that, a lot of policies is directing towards a higher inflationary environment, which also tends to be more positive from a cost optimization point of view for the IT sector. Plus, you're looking at the overall enterprise revenue growth trends that are accelerating. So you look at the S&P 500 across different industry segments, you see an uptick there for CY25. So I think that's a positive. You look at tech job postings number, I think it's been improving over the past 2 to 3 months or so. So I would say there are some positive indicators coming out of the uncertainty part, which seems to be behind. Having said that, we'll have to see how each vertical plays out. For the time being, it's fair to say that BFSI, which is the biggest vertical, I think that's certainly doing a lot better. You look at the weakest player, you look at the strongest player, and I think it's pretty similar to what's happening in that. So I think that's certainly doing well. I think high tech is another sector which is doing well. So you've got 50 to 55% of the business for the companies is doing a lot better than, let's say, where it was a couple of quarters back. There are some segments that have slipped. So parts of manufacturing within the automotive, some challenges there. But net seems to be positive.
Yeah, no, I mean, look at the BFSI stocks in the US, Citi, BofA, JPM. In the 3 weeks since Trump has come to power, these stocks are up. I think they've done better in the last 3 weeks as compared to what they've done in the rest of the year. So that optimism certainly is there. The question, though, also, I think, to my mind, I don't know if you agree with it, the bigger question is not if Trump is good for IT or not. It's whether AI is good for Indian IT services or not. And there, I think the answer is still very muddled, right? We don't have answers in that sense.
Prashant, I would say it's a lot less muddled. I think the concerns were a lot more, perhaps 6 to 9 months back. I think what we've seen over the past few quarters, and there are companies that have started to report a lot more information around what Gen AI and AI is doing to their business. It seems to be net positive. So you're seeing increase in headcount as well as a lot of incremental growth coming in from AI. I think that's a great sign. So I think that certainly has reduced some of the terminal growth related risks for the sector, I would say, which is partially the reason why there has been some re-rating. And second, I would say a pocket which has been competition for the sector is what has been happening on the GCC side. So we believe that the growth differential between the captives and IT sector, that's probably at peak levels now. So over time, that should expect to sort of come off and that converge. So I think those two are some of the more medium-term related risks, which look a lot lower. Now, I think AI, there are enough use cases that IT services companies are participating in. The conversions are improving from POCs to programs, as well as, like I mentioned earlier, a big part of incremental growth is driven by AI. I think these are certainly good signs.
Okay. All right. Apurva, we'll leave it there. Thank you very much for joining us. Appreciate your time here on CNBC-TV18. 3 minutes to market open. Let's get some more calls out of the way. Mitesh is back with us. Mitesh, what do you have?
I think I'll go with Hero Motors, Prashant, for targets of 49.90 to about 5,000.
Hero has been coming up nicely from the recent lows. Big underperformer. So Hero is Mitesh's 9-10 call. MSCI Index Rejig is back in focus. Vivek is standing by to tell us. Vivek, morning.
Well, good morning. Three particular passive indices, have gone ahead and seen changes made as far as Friday was concerned, and also today we'll address the MSCI, where the changes will happen in the last hour of trade. First up, we spoke about sensex, where Zomato will be replacing JSW Steel. Now, post market hours on Friday, FTSE also went ahead and announced its review, and this particular review mainly focused on IPOs as well as spin-offs. So, two stocks, Bharti Hexacom and Go Digit, will be in focus. Their inclusion into the FTSE indices. But the more important one, and today we will most likely see, some abatement as far as the relentless FI selling is concerned, given the fact that we are likely to see a little over $2.5 billion of inflows due to MSCI-related passive fund inflows. Now, which are the stocks that will be in focus? 5 stocks have been included into the MSCI Global Standard Index. Voltas, BSE, Alchem, Oberoi Realty, Kalyan Jewellers, these are the stocks that have been included. Remember, HDFC Bank will see the second tranche of weight increase coming in. Almost $1.7 billion of flows will be seen into HDFC Bank. This will happen over the last hour of the trading session. Along with that, MSCI India Small Cap Index will see 13 additions and 7 deletions. And today, India's weightage in MSCI EM Index goes up almost to 19.8%, second after China. Adjustments in the last hour of trade. So expect quite a lot of volatility, given the fact that quite a lot of positions would have been built into these stocks going into today's trading session.
All right. Vivek, thank you very much for that. So we just, I think running into market open, it's 340 points. So 24,253 is where the Nifty is seemingly opening up at. So still about 100 points away from, the 24,340-ish kind of zone, which is where the first, to my mind, the big resistance, not the big, but the first kind of resistance comes in, which is the 40-day. That is exactly at about 24,340. And in the morning, it was looking like you'll open right into that. So maybe this is not such a bad thing. You're not, not the entire, or not all of the juice is out right in the, right at the first stick. So maybe, something to do for the rest of the day as far as the Nifty goes. Let's see. Indices first, and then we'll get into individual stocks, etc. There you go. 24,240 is about 1.33% higher. You've got the Nifty Bank, which is up about 1.3%, 51,826. The mid-cap index is up about 1.7%. And this is the overall market start. Look at that. 49 out of the 50 stocks on the Nifty heat map are starting in the green. Just one name, that is JSW Steel, which of course is out of the sensex, and Zomato is in the sensex, but the impact is showing up there on JSW Steel, which is slightly lower. Otherwise, it's a very, very good start. 385 points, 390 points, and this is just the first 1 minute of market open that we are looking at. So lots to talk about. IT index, we're just having that discussion with Apurva. The IT index is up another 0.9% this morning.
PSUs, it is the return of the PSUs. That's the point that we were making earlier as well, that will the market start looking at some of the CapEx/PSU themes again. That seems to be happening sentimentally, at least right now. So before I talk about the Nifty, look at RVNL, Aircon, Railtel, Hoodco, PFC, NBCC, REC, IRFC, and the whole pack where the volumes are piling in, and these are gains in excess of 3, 4, 5%. In some cases like RVNL, 7, 8%. Aircon is up 6%. So massive move in PSUs at the start. Now on the large cap screen, everything is up apart from JSW Steel. Every other single Nifty stock is on the green side of the screen. What a big move this is turning out to be. So let's talk about the best winners or the biggest movers. Shriram Finance 6% up, M&M 4%, BEL 4%, Adani Enterprises 3.5%. There is L&T, BPCL, ONGC, NTPC. Doesn't matter. Take anything, throw a dart at the board, and you'll land up on the green side. It's that kind of a day. The big heavyweights are obviously contributing. SBI, Reliance 2 to 3% up on these stocks. HDFC Bank 2% up. ICICI Bank, all of them are up and about. And obviously, it's a very risk-on sort of a market. So relatively speaking, lesser appetite for pharma and FMCG. Cipla, Apollo Hospitals, Dr. Reddy's. These are stocks which are not getting that much. I mean, this is not their day. It's all about risk on big stocks, economy-facing stocks, and PSUs. That's how it seems to be. playing out. The Nifty is holding on to this 350-point gain. Bigger stories in the mid-cap index. That one's surging almost 1,000 points now.
Well, that's right. Just take a look at a few more stocks. IFCI, that one's flying away. One of the top volume movers. I think it's up close to 9%. You have Easy Trip as well. The stock has been a big underperformer, corrected big time from the top. It had a bit of a bounce in Friday's trading session. It's bounced again today. It's up close to around 6% or thereabouts. Jyoti Structures, they're looking to raise some money. The stock had corrected from around 40 rupees to around 30 rupees. I think that as well is one of the top volume movers, up close to around 4%. This infra push, there is some kind of a fear when there is a state election that some of those projects could run into some trouble. If there was that kind of a doubt, now that's out of the window. So you have HCC, Jay Kumar, that is flying away, both of them doing very, very well in today's trading session on decent volumes. Lloyd's Metals, it's a mining major here in Maharashtra, so that as well is up close to around 5%. As is, the stock has moved, I think, from around 200 rupees 3-4 years ago, all the way to around 1,000 rupees. It corrected a little bit from the top, but Lloyd's Metals as well is up, one of the top movers in today's trading session. Add to the list, you have Swan Energy. That one as well is higher in today's trading session. So let's pull that up. And Crystal as well, one of the recent listings. Well, that stock as well is moving very, very well in today's trading session. So we're holding on to solid gains. What's not doing too well? Very few stocks. I think Symphony's come in for some profit taking. It's down close to around 3%. Vare Energy is, it's corrected considerably from the recent peak. It went to around 3,700 rupees. Now it's up 2,700 rupees. So there has been some selling on that one as well. Need to keep an eye on a couple of these stocks. And I think that's about it. DOMS is a little bit low, but volume's very, very thin out there. So a rocking start. The Nifty well above that 20 DMA. The Nifty Bank has taken out the 20, the 50 DMA as well. It's moved to around 52,000 odd. And that's leading the charge this morning. Prashant, a very, very good-looking screen. You have 10 stocks advancing for one stock that's declining. Bazooka times.
And the point is, Nigel, anything incrementally fresh you're able to do in terms of make money is great. But the point is, nobody starts from scratch.
Yeah.
People have holdings, portfolios, and those portfolios can breathe with an open like this, right?
Indeed.
Which I think is a great thing. So while we are focused on the next big thing, existing portfolios were also under pressure, and this provides reprieve. So keep that in mind as well. So you've got Zomato, by the way, which is the number one volume-led gainer with a 5.5% gain. PFC and REC, I think we mentioned 5% a pop each. RVNL is up 9%. Swan Energy is up 4%. Adani Energy Solutions. Actually, we should just look at all the Adani Group stocks very quickly and see if there is some relief coming in that part of the market as well. Okay, so here we go. Enterprises is up 3%. Green is up 4%. That is Adani Green. There is Energy Solutions, which is up 6.5%. Ports is up almost 3%. Ports Thursday low was 995. Stocks back at about 1170. And you've got Adani Power, which is up about 2%, 2.25% as well. So that is the Adani Group pack, which is also seeing some relief come through. So all these, I mentioned RVNL, but look at IRFC, RITES. These are all railway, IRCON. These are all these railway companies which are seeing 5, 6, 7% kind of lifts this morning. Raymond on Friday ended 20% higher. It's up another 6%. So very strong move coming in from Raymond. The low recently on Raymond was about $1,300. Stocks at about $1,750 now in 4-5 trading sessions. So that's the bulk of what is coming through. So I was talking about railway, but mostly PSUs. But look at Titagarh. I'm not sure if you're missing any news flow, but 6% on Titagarh coming through right now. We'll sort of look at more as we go along. On the downside, apart from I think what we've already mentioned, not very much. It's all very quiet and volumes are lacking. It's all sort of kind of one way with 2,100 stocks up and about 190, 200 stocks which are lower. 10:1 in terms of advances to decline ratio. Manish Santalia is with us, Chief Investment Officer at NK Investment Managers. Manish, good to have you with us here. Thank you for your time. Fag end of the year, and I think we are just about getting into that period where we start to talk about what 25 will look like. But before we get there, just your sense. Does it look like? Is it beginning to look like that we are putting this corrective phase behind us? The first 10% plus kind of fall for the indices over the last 3-4 years. Do you think we are starting to put that behind us now?
So, Prashant, of course, we have seen a 10% correction on the back of massive liquidation by FIIs. Now, the crux to whether the markets would have seen the bottom or not would really depend on how earnings shape up. You know that earnings have been very anemic, single-digit sort of an earnings growth for FY25. And because of very slow government spending, you're also looking at a very muted earnings growth for FY26. At best, I mean, as things stand today, and things could change very fast because there could be a lot of government spending which could be due in second half of fiscal 25, or there could be some measures to revive demand in the system. Consumption is really falling off the cliff. But as things stand today, we are looking at a 10 to 12% sort of a growth in Nifty 50 earnings for FY26. And if you would like to extrapolate that sort of a growth for even FY27, you're looking at another 10 to 12%. So average of FY26 and 27 comes to around 1250 or 1245. Now, for a 10 to 12% earnings growth, the moot point is whether you would be willing to assign a 20p multiple, which the markets have given over the last 3 to 5 years. Whereas the 12-year long period average of Nifty 50 has been 80. So if you would want to see the maximum margin of safety, I can believe that the markets can test. I'm not saying it will test. It will depend on a lot of things as to how earnings shape up and how expenditure happens and how demand revives on the consumption side. But it can come down to 22,000, 22,500. Markets don't fall in a straight line. And whether the FIs would have seen the worst of selling or there could be more, because emerging markets as a whole are selling. So it's not only particular to India. So, these things would be there. And I think it's a pullback. But it's good to see green on the screen after a long time. But one would really keep fingers crossed to see if the market sustains that kind.
Okay, so that takes a big, bold person to give out a clear call. I mean, even if it's bearish on a morning like this. Manish, great to have you on. I just heard you say that 22,000 is still on the table, yeah?
Now, fundamentally speaking, should be, 1175 on a 1,050 base for FY25. That is a 12% growth. And if you were to extrapolate another 12% on 1175, that gives you 1,350. So 1 year out, an average of 1175 and 1315 is 1245. Now, the moot point is for a 12% earnings growth on Nifty 50, would the market be willing to give a 20p? Whereas the long period average of 10 to 12 years is 18 times. So the maximum margin of safety would happen if you were to extrapolate 1245 and multiply it by 18 times. That would be broadly 22.5.
Manish, the numbers are perfect. We completely get the logic going by numbers. But the thing is, it's the direction of money which starts becoming illogical at times, right? And it's the FPI exodus, which is why we got the correction. And who knows what they're going to do tomorrow. If they start returning, then what multiples do we trade at? That's a different debate. Right now, I want to focus on what we're seeing at present, which is, an interest coming back in the PSU side of the market. Obviously coming in, emanating from what we saw over the weekend, this massive victory for the NDA. But again here, rationally and logically speaking, would you advise a re-entry in PSU stocks?
So I have always believed that PSU stocks have great value. Now, the incremental news flows is that the government in the second half of fiscal 25 would be signing or has already signed some 16 lakh crores worth of projects, and they would all come through the PSU, the government-owned company. So that is one news flow. And obviously, the entire revival in earnings for FY25 is built on the fact that government opens its purse strings, which was very, muted, so to speak, in the first half of fiscal 25. So that's the big news and big call on the PSUs per se. There is deep value, and obviously the DPAM new diktat paying 30% of profits as dividend, etc., all very good. And there is bound to be re-rating in the PSUs, not only in the banking space, but I think all monopolistic PSUs would have a case to be bought into. As far as the FI flows are concerned, look, I mean, there's nothing to believe that their selling could abate even now, because they have been selling across emerging markets. It's not one market preference over the other. It is basically money going to the US, and thanks to the change in regime in the US, you would see that massive outflows are happening from across emerging markets. It was so surprising to see Friday, you had a net negative figure from the FIs. in spite of very strong pullback and a short covering. So yes, there is a bout of short covering and markets don't correct in a one way, on the downside. But I think it's time to be very cautious. Low-hanging fruits of the last 4 years, when anything bought on a dip, you made money. I think that era is over. It is time to pick and choose very carefully.
So money making will be a little bit more difficult. Manish got that point, and you're sounding a little bit cautious. Still now, we have been talking about just the earnings downward revision. You're talking about the multiple as well could be not as high as it was earlier on the Nifty. People are giving it 22, 23 times. Or you said a more realistic number could be high teens. Got that point. The government spending was very, very bleak in the first 5 months of this fiscal. However, in the last couple of months, that's picked up as well. And hopefully that's what supports, a bit of a booster shot in terms of growth, in terms of earnings as well for the second half of the year. Given that sort of a backdrop, would you look at some of these infra themes, to play? Because some of them have corrected a decent amount from the peak.
Yeah, so basically, the disappointing part is that the private sector is not doing the capex. The heavy lifting in terms of spending has to come from the government. And from that point of view, I think infrastructure companies, etc., which have corrected 25, 30% could be looked into. But mind you, again out here, when you take a call on, let's say, capital goods or infra players, and when you want to give earnings multiple to order books which have to be executed over the next 5-8 years, I don't think, that sort of a direct correlation exists between an order book, and that to long-dated order books, and PE multiple. To my mind, that's quite fallacious and driven more by sentiments rather than anything else. At best, you could, let's say, price in earnings growth on order books, which you have a visibility of the next 2, 3, 4 years. But nothing like an 8-10-year order book, and you want to give a multiple to that. So again, out here, I would believe that the best sectors to invest in current times, given that there is a propensity for the currency to depreciate even from these levels, would be the export-oriented sectors, the IT pharmas of the world. Banking, in any case, was very cheap. You could look in at PSUs and some of the platform companies, particularly the catering to the financial services side of things. I think those would be the best place. Still wary of the capital goods, power, infra, because they could be more sentimentally driven. But having said that, if you have hardcore numbers come through in terms of government spending, then obviously there could be a change in sentiments towards that. But I think valuations mostly are still quite prohibitive on the defense, PSC, railways, infra, capital goods, so to speak.
So valuations are still prohibitive on defense and many of these government-led infrastructure names. So you wouldn't look at buying now unless there's a major pickup in government spending in the second half, right? Just clarifying.
Exactly.
Okay, got it.
Absolutely.
Okay, Manish, as we come to the fag end of the conversation, leave us with a few names though, bottom-up ideas where you think there is still growth with full disclosure and everything.
Prashant, I can't talk specific names, but suffice it to say, if you look at Q2 numbers, one of the areas where I think there could be a structural re-rating is this whole financialization of savings team, anything to do with tilt towards the equity market. Exchanges, depositories, wealth management platforms, online broking, distributors, there you could see a significant structural re-rating going to the next 2, 3, 4 years. You may find the near-term valuations expensive, but suffice it to say, the growth outlook on many of these platform companies catering to the capital markets, and because they are duopolies, oligopolies, you could have a strong structural re-rating on this whole thing, given that earnings visibility is quite sharp out here. This would be one of the preferred sectors where maybe the entire market is not looking into. And the other sectors where I think there could be a significant outperformance, and we are talking all relative numbers out here, could be your pharma, CDMO, your IT services coming out of a low cycle, and spending is likely to pick up, given that the US regime change would mean corporate tax cuts and more spending on technology. Those would be helpful for the IT services and obviously banking. These would be the preferred areas.
All right. Manish, the first part that you said, right, capital market plays, I think we have the CAMS management joining us now. So I think if the management is hearing us, I'd be very pleased to hear that, your views on the subject. So capital market plays and CAMS, of course, is right up there. Manish, thank you very much for joining us. Great conversation as always. Thank you indeed.
Absolutely, as if that was on cue, right? Because we do have the CAMS management with us. And that's the real question. I mean, what is the growth runway ahead for businesses which are linked to the whole theme of financialization of savings? That's what we will discuss with CAMS right now. October, as we all know, saw record equity inflows coming into mutual funds again, almost 42,000 crores being poured into equity funds. And SIPs, they've crossed the 25,000 crore rupee mark per month for the first time ever. So what does this mean in terms of business for a company like CAMS? Anuj Kumar, Managing Director at CAMS, is with us. Mr. Kumar, great to have you on. Thanks for joining in. And your numbers are really telling the story, right? Because first half, you have grown at 30%. And I think in terms of margins, you're clocking EBITDA margins, you're clocking 45 to 46%. So those are stupendous numbers. Can you quantify, because this financialization of savings seems to be almost irreversible. That's the universal view. So as we look at CAMS, not just at the end of FY25, but say FY26 as well, what is the revenue trajectory? What is the margin trajectory? Because while the MF business grows, you're also talking about growing your non-MF business. So what will be the revenue pie and the margin profile?
Hi, good morning, and thanks for having me over on the show. Broadly, I think we are living in very, very exciting times. The retailization of the mutual funds market, just financial awareness across population segments in the country, I think is driving a movement, and we're fortunate to be a part of that. Like you said, if you see last quarter, we saw a revenue growth of almost 32%, which was an across-the-board revenue growth. It wasn't driven by a single segment. MF grew about 32.9, but the non-MF part also grew very close to 32%. On a profit level, we expanded EBITDA year on year by about 40-odd%. Now, whatever has happened in the months of October and November, I would say is perhaps a bit of a correction in the overall scheme of things. But the solid base effect of what's happened in the last 8 quarters, almost 2 years, is standing us in good stead. So I think for the second half, while we're not expecting revenue to be in the early 30s, mid to late 20s. And when I say that, I mean 26, 27, 28% is entirely on the cards. Similarly, an EBITDA growth of 40%, which we experienced in the last quarter, I think maybe a little more muted, maybe in the mid 30s, which is a 34, 35% growth. EBITDA margin, which has crept up by about 1.5% a year, is in the range of 46, 47%. I think it's safe to presume that if things hold at this level, we will hold margins at 46, 47%.
So just clarifying, just clarifying, so you are saying that revenue for FY25 will probably be towards the high 20s. So that, in some sense, that's a revision, because earlier I think you were guiding for 20% growth. Now it's going to be closer to 30%, with margins holding at around 47%.
Yes. That's entirely possible if things hold at this level. And that is because, like I said, we have businesses firing on all cylinders across the board, not just in the MF book. So that looks entirely possible.
But EBITDA, the actual EBITDA growth, sir, that is, you're expecting that to come off a little bit.
Yes.
Between, you're saying 34 to 35%.
That's absolute EBITDA growth.
Absolute EBITDA, yes.
Yes. And the percentage EBITDA would be in the range of about 46% for the year.
Okay. This is largely going to be a function of, I mean, at the end of the day, the big overlay for you is how markets do, right? If we've had a couple of years of fantastic markets, flows have been very, very strong. So that is the big variable, right? I mean, as we head into 25 and look beyond FY25 itself.
Absolutely. I mean, just think of it this way, that as more and more retail investors kind of plug into the markets, businesses like KYC, KRA, and payments get a fill-up. And as more and more, the overall assets increase, that's a fill-up to our MF business. So that's how we participate in the markets, at a level of retail participation and at a level of net sales and AUM growth.
All right. Hi, Mr. Kumar. Good morning, and thanks a lot for joining in. This is Nigel on this side. Let's talk about a couple of important aspects. Now, flows continue despite the correction that we recently saw in the market. So your revenue base increases. But telescopic pricing, that comes into play, which could be a bit of a negative. Could you tell us, according to your analysis, which factor will outpace the other, in your opinion?
So think of the business this way, that the business is very efficient as it expands. It becomes efficient disproportionately as it expands. So as we get more revenue, I think our ability to take that marginal incremental revenue to the bottom line is very strong. That's how the business works. It far outweighs the telescopic pricing and any impact of the telescopic pricing. So we are always votaries of AUM expansion, whichever way it comes, whether it comes the retail way and we sell a lot and set up a lot of accounts, that's a good way. If it is market gains, again, it's a good way. But the telescopic pricing does not outweigh the impact of increased assets. And that's how the overall business works.
So just, Nigel, could you explain what is telescopic pricing for our viewers? What does it mean?
The way it works is that a buyer, as he buys more, buys incremental stuff cheaper. That's like any bulk purchase you have in any other product, whether it's IT or this, that when they buy more, the pricing goes down a little, and when they buy a little more. So as assets increase, their absolute pricing keeps coming down. That creates a very motivated buyer because the buyer has money left on the table on his P&L to spend on other things. As far as we are concerned, because we are efficient, at the margin, it makes sense for us to sell a little cheaper as assets expand.
Got it. All right. So asset expansion will take care of this perceived negative. Got that. Mr. Kumar, also, yields have been stable over the last few quarters. What's the outlook ahead? On a steady state basis in the long term, how should it look like?
Our guidance has always been that because of the pricing, yields will deplete a little. They'll deplete about 2% a year. It's also a fact that some of the passives outgrowing the actives, as and when it happens, will also bring in slight compression in yields. I think it is safe to expect that a 2.5% compression in yields on an annual basis will be experienced. But like I said, all our growth and profit growth trajectory is predicated on this compression. It is despite the compression that we will expand the margin.
So finally, tell us what, again, I go back to that question of the revenue mix, not at the end of FY25, but a year down the line. Let's talk FY26. What will CAMS look like? How much from MF? How much from the non-MF businesses? If you could just break it up. I mean, how much will insurance contribute? You're doing the AIF business. There is insurance. And also the margin and the break-even timelines, because in the past you've stated that the non-MF business should move towards 25% blended margin. Are you on track with that?
Absolutely. Absolutely. So if you see three metrics, one, non-MF absolute revenue growth in percentage terms should be faster than MF. I think we've accomplished that for many quarters. Secondly, in terms of margin, the non-MF portfolio is now in its teens, in its late teens, which means getting to about 25, 26% should be a 6 to 8 quarter journey, but nothing longer than that. I think a lot of the new plays will start breaking even and will start contributing. Within non-MF, KRA and payments are two shining jewels, which are anyways at very strong platform kind of margin trajectory. About 5 or 6 quarters from now, let's say end of FY26, we expect MF to be about 84 to 85%, non-MF to have expanded to about 15 to 16%. That's a trajectory that we believe can be delivered.
All right, okay. Mr. Kumar, we leave it there. Good luck. Thank you very much for taking on the time and being with us this morning here on CNBC-TV18. That is Mr. Anuj Kumar, Managing Director at CAMS. That is, of course, one of the foremost capital market plays, which markets have liked over the years, and the stocks, of course, done very, very well. We come back and we put the focus on the implications of the Maharashtra verdict, the election verdict on the real estate sector here in the state. We have Ghulam Zia of Knight Frank India and Bowman Rustam Irani of Keystone Realtors will be speaking with us on the opportunities and how this sort of landslide victory for the BJP in the state changes things. Stay with us. Welcome back. You're with us here on Bazaar. Well, you know, the market, the big story for the market and the reason the market is celebrating, of course, is that the BJP-led Mahayuti alliance has secured a landslide victory in Maharashtra. And it's not just the alliance. BJP itself, of course, has come out on top somehow in the state. So that's a broad positive, that sentiment positive that the market is trading on the back of. But specifically for the real estate space in Mumbai, in Maharashtra, what does this mean? Because after many years, you've got political stability for the next 5 years. Those are numbers, of course, in terms of what the final tally looked like. Ghulam Zia, Senior Executive Director of Knight Frank India, and Baman Irani, Chairman and Managing Director at Keystone Realtors, are joining us now to take some questions. Gentlemen, good morning. Great to have both of you here. Prashant this side. Baman, if I can start with you, how does this change things up? Were things not moving fast enough, which will now move fast in terms of regulations, local taxation? What should the real estate industry expect? And of course, what's the ask really as well? Go on.
Prashant, first of all, I'd like to congratulate the government, the three-paya government as it was called, for a landslide victory. And I can tell you this, that overall the pace of growth that we have seen in the past should continue. We are looking forward to policy-driven, growth taking place, whether it's the MMR, whether it's all of Maharashtra. There's tremendous potential. I'm sure the BJP is going to be extremely happy that Maharashtra, which is one of the leading states in the country, is where they have such a solid base as of right now. I congratulate all three leaders, Mr. Devendra Fadnavis, Eknath Ji Shinde, and Ajit Dada Pawar, for a fantastic outcome that is there. We are looking forward to a very stable, I would like to say infrastructure-led, which was already the case, but stronger infrastructure-led growth taking place in our city, in MMR overall, at the same point in all of Maharashtra. And I'd like to say that on behalf of CREDAI and CREDAI MCHI, I pass on my heartiest congratulations to the government, and I look forward to interactions more often with them so that we are able to continue this supernormal growth that we are seeing in the real estate sector, to be able to drive the economy and to help affordable housing take more of a prominence in Maharashtra itself, and thereby lead the entire country to show the way going forward.
And I think, the point taken, Baman. Coming back, we'll just come back to you, Ghulam. Morning. What is your sense? Specifically, what does this win mean for the real estate space?
Well, what we have seen earlier, last couple of years, I would say, strong leadership was the requirement. And while we wanted to believe that the double engine government, the so-called double engine government, had to be fully in action, but that was something which is not showing so much of results because of, I won't say a weaker leadership, but unclear mandate. But today, with a crystal clear mandate and no insecurity or looking back at what could happen to the government, etc., now we are expecting that way forward, we will see rock solid performance from the policymakers' side. And as Baman was talking about, infrastructure-led growth is going to be the key expectation. And of course, it has a direct impact on the health and performance of real estate, which, by the way, once again, as Baman was talking about, almost about a year and a half of a bumper show in Mumbai specifically, and even in Pune and other locations in Maharashtra. We've been watching fabulous growth in real estate. And now is the time to see even more growth in the real estate sector, led by a strong infrastructure performance. And also, because of double engine, we are expecting a lot of industrial focus to get back on Maharashtra, which for last a few years was not really the key factor.
All right. Good morning, gentlemen, and good to see you all in. Baman, talking about CREDAI, in fact, I bumped into a member president, if I'm not mistaken, down the road, and I asked him, I said, what do you think? He said it looked good and it's going to look even better from here on. So echoing the sentiment that you did say. Let's focus on the real estate part, though. You have a fair bit of exposure out there. What are the kind of policies, what the kind of boost do you expect to come in on this part of the business? Because it's clearly picking up steam after quite a while.
So, Nigel, thanks for that question. Actually, if you focus on the MMR area itself, I think the government's push towards infrastructure should continue. That's our first ask. Second is a clearer, policy that allows for better development to take place, especially if you look at Mumbai. The redevelopment space where we have a major play needs to be absolutely kind of put on, let's say, supercharge. And, as Ghulam said, Ghulam, just telling you, it's not a double engine, it's a triple engine Sarkar right now, with a full mandate of the people. And we look forward to a solid growth being there. Mumbai, as we all know, has got a great amount of slums, and it's already in the BJP's mandate that, they want to see a slum-free Mumbai city. So any drive towards that will continue to kind of boost the options of Mumbai's growth. One very important factor, which the government should focus on this time, is to improve the, improve the use of, or rather coming of more offices in Mumbai. Without the growth of commercial development, Mumbai will not be able to sustain the growth. Mumbai was and will continue to be the financial capital of the country. And we hope towards this, the government has an absolutely clear mandate to make that continually grow. Places like BKC, places like Sivri, places like Lower Parel, and many more, mid-city development should take place so that there is a lot more of commercial development. Sustainable, cheaper, and better commercial development with great infrastructure will drive the growth of Mumbai.
Baman, hi, great to have you on along with Ghulam. And when in your previous answer, when you were saying that this should be a big boost to affordable housing, I almost stopped, breathing. I thought, where? In Mumbai, where is affordable housing? But then you said Maharashtra. So yes, for Maharashtra as a state, maybe affordable housing will get a boost. But, the jokes aside, to talk about the city of Mumbai, because the sentiment is so strong now with this election win, what should we expect on pricing? What has been the average appreciation so far this calendar year? And going forward, what do you think the city is in for?
So, Surabhi, two things I'd like to state out here. A, it is possible to provide affordable housing. It does not have to be purchased affordable housing. One can look at, and the earlier, 2 or 3, or rather I would say 2 or 3 terms before, the government had come up with a fantastic scheme of rental housing. And that can be given a big boost. Around the world, you see cities developing on the back of good housing created by the government and then run by private enterprise on a rental housing model. I think that is very, very possible for the city of Mumbai. Second, I'd like to state that overall, with the infrastructure growth, with connectivity happening to Bhandup, Dombivli, Virar, Vasai, and even the Navi Mumbai belt, it is possible to get cheaper lands and give incentives to the developers and give incentive to the buyers as well. Why can't we have a stamp duty, which is a 2% stamp duty across the board for all residential real estate purchases, especially if it's your first purchase, and then give a further incentive to the lady member of the house if she's purchasing, because that gives more strength to the lady of the house who's basically the homemaker. And lastly, I'd like to say that there are certain taxes that are hugely impeding the cost of a home in Mumbai. I'd like to quote, what we've already submitted to the government in the past. We are paying anywhere between 28 and 32% of the value of the home. I'm not speaking of the cost. In terms of cost, it's much higher. In terms of value of the home that a home buyer pays, anywhere up to 32% is going directly, indirectly into the coffers of the government. If we can talk of rationalizing these, we can talk of making a lot more affordable, homes a lot more affordable in Mumbai city.
Sure. I think those are some great ideas, and I'm sure a lot of this will be up for debate and discussion as the new dispensation gets underway. 30-second answer, Ghulam, over to you. Now, from an investor's standpoint, and I'm talking about a call that runs into the next calendar year in 2025, would Mumbai feature in, say, your top 2 or 3 destinations to invest in from a real estate standpoint? And if yes, would it be residential, commercial, mix? What about Maharashtra and Mumbai? How does it fare in the national pecking order from an investor's perspective?
Well, from an investor's perspective, I would rather keep residential real estate aside, because I think your question, which was not answered by Berman, was on price rise. And we believe that the price is already going up, especially in mid to upper end, beyond any reasonability. And hence, any investment perspective for residential real estate is definitely out of question. Commercial, of course. Once again, while Mumbai has been showing good amount of new office buildings also coming up, Mumbai and Maharashtra would continue to be, and let's not forget Pune. Pune has always been on the commercial real estate map in a big way. So between Mumbai and Maharashtra, commercial real estate investment will continue to drive the investor sentiment, definitely not residential.
All right. The other thing, guys, is that we probably will also have BMC elections now.
Finally.
After 3-4 years, right?
Indeed.
And,
Rooting for
the big
Mumbai.
stuff is good, but,
Rooting for the roads.
maybe the roads.
Yeah, absolutely. Praying for
it's a bumpy ride out there, right? Right now, but maybe things will get better. Boman and Gulam, thank you very much if you're still there for joining us with all that perspective. Thank you indeed for taking us through that measure.
All right, well, let's get to our next guest then. Let's talk about L&T Finance. The company has completed 30 years of operations. How's the business momentum in the near term? What's the broader outlook as well? To help us out with that, we have with us Mr. Sudipta Roy, the Managing Director and CEO of the company. Hi, Mr. Roy. Thanks a lot for joining in. And congratulations to you as well as the entire team on this achievement.
Thank you.
Let's talk about business. I'm looking at your AUM. It's roughly around 93,000 crores odd. In the near term, what kind of AUM growth are you looking at? If you could break it up between segments. And say in the next 3 to 5 years, what kind of a target do you have on the AUM growth front?
Okay, see, as part of, we had initially announced in Q4 FY22 about the Lakshya strategy for L&T Finance in consonance with overall L&T Group Lakshya strategy, where we had said that we would grow at about 25% CAGR. And we've been growing pretty well. In the last 3 years, we have increased our retail book from 45,000 crores out to about close to about 90,000 crores right now. One of the targets that we have taken on ourselves is to try to see if we can double the book in about the next 3.5 to 4 years' time, is what we would like to do. And, if you look at, we are one of those NBFCs which are, if you look at our asset profile, we're almost actually 50% rural, 50% urban. And very few sort of NBFCs have this sort of balanced asset profile. And I do believe that, our growth will come equally from urban sectors as well as from rural. Okay. Though the urban might outpace rural over the next 3 to 4 years' time. So what I believe is that this urban-rural split might move to 60% urban, 40% rural. And, in rural, as you know, we are the third largest in microfinance. So that business will continue to grow, but probably that business will continue to grow at a little lesser clip than, whatever has been growing in the last 2 to 3 years. Yes. However, the urban businesses, especially home loans, loan against property, SME loans, maybe a little bit of consumer loans like personal loans, two-wheeler loans. We are one of the largest in the country in two-wheeler loans. Most of these urban consumption-driven businesses will continue to grow at a much faster pace. Overall, we are looking at about a 25% growth rate, more or less on a steady-state basis.
Got it. And since you have a fair bit of exposure to the rural as well as urban as of now, 50% apiece, give us your sense. There's a debate out there. Is there pain or there's no pain? Are you seeing stress in the system, particularly in the rural portfolio?
So I'll talk about the industry. Obviously, there is a little bit of a stress, especially in the MFI segment. There is leverage that has built, right? Though I would like to believe that we are one of those lenders who is least impacted by it because of our very prudent lending practices over the last 3 to 4 years, especially in the MFI segment. Yep. But however, there is stress. There are slippages and there are questions around asset quality. However, I do believe that on the back of the good monsoons that we have seen this year, and again, the election was a disruption. It was a 3 to 4 month disruption. And many of the social flows which were there actually went through a hiatus during that period. Majority of the social flows, etc., have started. The monsoon yield has been good. The Kharif crop has been good. We expect the Rabi crop to be very, very good as well. We had a rocking month in tractor disbursements in the month of October. Right. And in that tractor disbursement momentum continues in the month of November. And if you were to correlate tractor demand with sort of rural demand as well, I think the industry will probably see the worst of this crisis maybe, latter part of this quarter, early part of next quarter. Next year, I see normalcy coming back.
When you say crisis, you mean MFI?
MFI.
And how would you, we spoke with a few other players last week. They said, well, fourth quarter should be the peak of MFI stress. Would you agree with that?
I would agree with that.
Jan to March.
I would agree with that because the Kharif crop arrivals have been good. We expect the Rabi arrivals to be good as well because the water reservoir levels are at record high after the good monsoons. So if on the back of both of this, the resumption of social flows, etc., I do believe that sometime in the middle of Q4 is when probably.
But would you agree that for NBFCs as a space, again, it's not L&T Finance per se. Yeah. RBI has come out. Regulation-wise, they've been coming down on various fronts, not just one line of business. Would you say growth? You said you'd like to double your loan book. in the next 3 to 4 years.
3.5 to 4 years, yeah.
So there is slight moderation as compared to what you said earlier, which is 25% CAGR, right? I mean, now you're probably between 15 and 20%.
Correct. See, the thing is that, you know, some businesses will grow at a particular speed, some businesses will probably go at a lesser speed. And again, you calibrate your growth according to the market conditions, right? So obviously, I would not say RBI has been singling out NBFCs. RBI has been generally, and the regulator has been generally sort of advocating moderation in certain asset class growth. And it is across the financial industry segment. And I think they are saying that, you know, lend where you think the customer has the capacity to pay, and do not lend beyond the customer's means, and also be transparent with the customer when you lend, and make sure that no AG practices are resorted to while lending. So I guess it's a directional guidance to the entire system. Also, the RBI wants us to be very, very transparent with the customer in terms of pricing, and wants to make pricing more reasonable. Because of all this, obviously, the industry will go through a little bit of adjustment phase before the new cadence sort of settles in. And that will lead to maybe, you know, maybe the heady growth that you might, a couple of percentage points might be drawn from there. But I do believe that is good in long-term interest of the industry.
But does that mean, in FY25, does that mean, say, 20% growth for you, or 25%? Will that
it's very difficult to pinpoint whether it's 20 to 25%. We have said that we will be directionally between 20 to 25%, you know, and probably will land up somewhere between those numbers.
In that range, got that. On asset quality, so you're saying that the MFI situation will hopefully resolve itself by the fourth quarter. The other area of concern, which obviously the RBI flagged off this year, was personal loans and, you know, things like credit cards, etc., unsecured lending, basically.
Yes.
What are you picking up from the ground on that side of the portfolio? Is there any delinquency building up, any concern building up over there?
See, the prime personal loans portfolio continues to hold well, right? We only saw stress in the below 75,000 rupees ticket size, right? And if you look at the overall distribution of personal loans in the overall industry right now, probably the number will be somewhere between 13.5 to 14 lakhs of personal loans. The below 75,000 segment, I don't think is more than about 1 lakh or 1,25,000. 1.25 lakh crores odd. So it's a small portion of the portfolio that has stress, and large portion of that stress probably has, to a certain extent, flown, or it's stabilizing. In fact, if I look at the data, I think the entire personal loans industry, as well as the consumer finance industry, has shown some signs of stabilization post-September, October. So I do believe that that industry, that particular phase is probably over, and the industry is moving towards stabilization.
3.2%, roughly 3.2% is where gross NPAs were for you at the last quarter, you know, percentage. Is that the peak? Does it improve from here on? And again, I'm talking about an outlook for the next couple of quarters, not necessarily just this year end.
See, the fact is that we would like, our credit cost was roughly about 2.5%, whatever was our credit cost. So the fact is that, you know, because the MFI, you know, and we are a very large player in MFI, right? Yeah. So even if a 10% dilution in collection efficiencies leads to some flows, right? And because there was some flows in the early part of this year, which is between April, May, June, right? Some of those flows will keep on coming and moving into GS3 and NS3, you know, respectively. So more or less, I do believe that the credit cost that we have at that particular level, we try to stabilize it at this particular level, but there might be some 10-15 basis points ups and downs for the next 1 or 2 quarters before it settles down again.
Very quickly, what about NIMs? What should it look like? It came off a little bit on a sequential basis.
Yes, the NIM came off a little bit primarily because, you know, the asset quality, the asset mix actually changed, because we slowed down a little bit of MFI, which is generally a higher yield product. And, you know, overall, your mortgage and LAP portion of our book has gone up. So because of the adjustment in the mix of the input products, the sort of the NIMs have moved a bit. But what we have guided is that we will try to keep our NIMs and fees between 10.5 to 11% is what we have guided.
All right, Mr. Roy, we congratulate you once again. This is a landmark milestone in that sense. And congratulations on the event tomorrow as well, right?
Thank you so much. Yeah, we are actually, you know, we have actually retooled our sort of technology team, and we have one of the best teams. We would believe they're one of the best teams in the industry in terms of data science and artificial intelligence. So what we thought was that as part of our 30-year celebration, you know, why not have a conference that looks at AI's applicability to BFSI, real-life use cases, and we have the conference tomorrow. We got very good response, and we hope to have a good outcome tomorrow.
Absolutely. Congratulations and good luck for that event as well. Hope to see you tomorrow.
Thank you so much.
Thank you. Well, that is L&T Finance Management with perspective on the business across different segments. We'll take a quick commercial break here. We're going to come back. Mitesh Thakkar will be with us. We focus back on the market, which, by the way, is up 370 points. So we're round about where we started in the morning at 9:15. So 24,278. Take that break. See you on the other side.
Welcome back. Well, the markets continue to hold with good gains. So 350 points is what we had at the start, and we're holding with those gains. So the bulls will be quite happy. Let's get Mitesh Thakkar back onto the show. Mitesh, it's a good start. First 1 hour goes to the bulls, and they'll be feeling good. What about trades? What do you have for us?
Good morning, Nigel. I think the setup is still positive. With this kind of a gap up, there's always a risk of an intraday decline, and I think that can still happen. But the good thing is that the daily, the 2 hourly, the 4 hourly charts have all turned up, which indicates that possibly, even if there's a decline or if there's an intraday dip, I think that will be bought into. So on the Nifty, I think, traders, if they get a level of around 24, 150, 180 zones, I think that's the level to enter with a 50, 70 point kind of a stop loss. And I think on the upside, let's look at 24,500 as the target area. And on the stock side, we have all buy calls. In fact, the long side is in direction to trade. So I have a buy on IPC Ipca Labs with the disclaimer that, there's a recommendation to our clients, and I also have some long call option positions, so there's vested interest. But Ipca Labs can be bought with a stop below days low of 1595. Look for a target of around 1640 or thereabouts on the upside. And the second stock which I like is JK Cement, which I would recommend buying with a stop at about 4200 for a target of around 4425.
On Reliance Industries, it's at its 20 DMA. It's seen a good bounce in the last 2 sessions. Where is that headed? Important for the Nifty?
Very important, Nigel. I think it's heading towards 1320, 1315 zones, which is about 20 points away from here. And there's, as you rightly said, a couple of averages coming in. And then possibly 1370. So I think the way traders should approach this is that take some profits at 1320, trail your stop losses. And once it starts getting past those 1320, 25 zones, look for a target of 1370.
Okay, all right, Mitesh. Thanks a lot for that. Well, we have got our eye on the equity markets for the time being. Manisha joins us. She's going to tell us what's going on in the commodity markets as well. Manisha, take it away.
Well, thank you so much for that. I want to take a look at the precious metal prices, where last week was a grand one. You saw gold and silver prices both gain quite strongly. Gold actually was up 5.5%. Making it the best weekly gain in last 2 years in that sense. The prices did gain from a low of almost 25.70 on the lower side, 25.40 by the way, and did see 2700 on the higher side. The Asian markets right now, though, are headed in for a bit of a profit taking on those kind of levels. So 1.5% of a decline, as you can see. But that is the range, 2536 to 2700, that we have seen in last 10 days come in for the gold prices. And with that, I also want to show you on what we've done in sense of gold prices in last 3 or 4 years. Well, it has been higher highs and higher lows, as you can see. Higher highs first, and we have seen prices continue to gain up. 1890 was a high in 2021, and then we've seen 1900, 2000, and almost 2800 in this year by now. The lows also have been on the higher side. Well, we saw 1700. It was only last year that we were trading at 1810, and 1992 has been the low for this year as well. Far away from where we are looking at in sense of highs and sense of gold there. So absolutely very strong real returns that you have seen gold give you in last many years, as you can see on your screen there. Well, it has to do with this very strong global central bank buying, where many of these banks have been adding gold to their forex reserves. It also has to do with the flare-up in the Russia-Ukraine war there. The markets are looking at safe haven buying continuing in case of gold there. The hedge funds have come back in a big way as well. It was last week that we saw net longs at a 15-week lows. But since the escalation and since the fact that we've seen markets continue to look at Trump impact on various taxes and infrastructure, etc., gold has seen buying come back because of that as well. And then this is going to be a 6th straight week in the month of October that you are looking at the global ETFs come into gold in a very strong way. The dollar index today is trading at a 1-year off as well, and that has been supportive. But the global ETFs now stand at around 3,244 tons. If you look at the overall AUMs, those have gained up by 33%. 5% of a jump up is what we saw in the month of October alone. For the Indian markets as well, the buying has been strong, whether it's about physical buying, ETF buying, and the futures and options also are hitting record highs there for this year as well. Even as the gold prices are trading at an all-time highs, you could be looking at imports anywhere between 700 to 900 tons. Well, going forward, all the Wall Street banks and brokerages do estimate that you're looking at higher prices from here on. So $2,900 to $3,000 an ounce is an expectation coming in from UBS, Goldman Sachs and Citi. This week is going to be quite important because you have so much of data coming in. Remember, it also is a truncated week because Thursday is Thanksgiving in US, Friday would shut early, so it's really is a truncated week. But ahead of that, before that, you'll have the FOMC minutes come in, inflation, personal income spending, inflation data also from Australia and Eurozone, and then you have GDP numbers also coming in from India, Canada and various other countries. So a very data-heavy week, even as it's truncated, and the markets do believe that you could see some gains continuing in case of gold.
Okay, so gold will continue to sparkle in all probability. Got that, Manisha? Thank you very much. You know, as we take the break, just keep your eye on the PSU part of the market. Stocks are ripping away. IFCI 11-12%. Look at some of the railway names like Railtel and RITES, 9-10%. There's such a huge amount of a sentiment boost coming back in. PSU, by the way, the PSU Bank Index is the biggest winner on the screen right now. And it's not just a State Bank of India. I mean, names like UCO, etc. They're all Central Bank of India. They're surging 5, 6, 7%. So railways and PSU banks are the greenest part of the PSU screen today. But there are other stocks like NBCC, etc. So a big, big move on PSUs. With that, let's quickly take a break. And after this, it's our special segment, Indianomics. Today, Lata will be in conversation with Santanu Sengupta of Goldman Sachs to talk about the Indian economy outlook for 2025.